Hi all, welcome to Diversified Finance. My name is Lakal. So as I promised in my last video, uh, here we go. We're going to discuss about how to avoid our crypto mistakes. So the number one point is do enough research. So any kind of investment that you want to put your money into, you have to make sure you do enough research and understand the risk level. So if you think it's a high risk kind of a asset class, for example like crypto, you might want to put only 10% of your overall portfolio, right? So because this is really volatile, in a matter of weeks you could lose like 70 to 80% of your initial value. So do enough research and make sure this is the right tech, and then make sure whether this has a use case in the future, and understand is the right kind of investment for you. Yes, there's no guaranteed investments, no investment guarantees that you're gonna get returns out of that. Yes, there's a risk involved, but once you've done enough research, you are not bothered so much, right? Because you know a bit of idea whether this asset class has a future, so you can buy and you can relax, and no need to panic buy or panic sell when the market goes up and down. So first one is do your due diligence or do your research. Second one is have a strategy when buy. So once you done enough research, so next step is to have a strategy to accumulate, to buy this sort of asset class, the asset class you've chosen. Let's say it's Bitcoin. So let's say you're planning to invest $10,000 into cryptocurrency. So in that kind of scenario, you probably invest $1,000 of what you have, so like 10% of your initial investment. You take that and you can buy some Bitcoin. Given that you need to make sure if you're good at reading charts, if you look at the charts, you can see Bitcoin has parabolic moves. It goes from 1,000 to 20,000 in matter of years, in matter of months. So if that kind of scenario, if you see the chart is parabolic and it's kind of going towards the ceiling, right? That's when you realize, okay, this is not a good time to invest. So if you have a strategy, you can invest first 10% of your initial investment, and whenever the market goes down, whenever you see Bitcoin dips, whenever it goes down, you can dollar cost average, you can buy little by little and get to your target of achieving $10,000 worth of Bitcoin. So that's the so whenever you buy, you need to make sure you have a strategy. You can write it down on a piece of paper, so you can say, okay, next time when Bitcoin goes down by 10-20%, I'm going to accumulate 10% for my portfolio. Again, when it might go up, go up by 10, 20, 30%, and if it drops again, you have a bit of you look at your notes and you realize, okay, it's a good time to get in because the market has dropped by 30-40%. I'm going to accumulate another 10%. So that's having a strategy to accumulate Bitcoin or any kind of asset class. Here we're talking about cryptos. So that's number two. Number three, buy more when low. So if you realize, if you look at the Bitcoin chart, you realize in 2020, March or in April, Bitcoin price went down to less than $4,000 USD. That was a great time to buy because most people panicked and then they start selling. They were worried that it could go even lower, but the investors with experience, bargain hunters, they just got in and they start buying. That was a good time to buy. Whenever you see market is crashing, when there's a lot of fear, that's the best time to get into this kind of asset class, especially Bitcoin or other cryptocurrencies. So when you see the price is low, you probably, instead of putting 10%, you just go 30%. You use 30% of initial investment and buy more when the price is low, because you know this is a good time to accumulate more Bitcoin because the prices have gone down. Maybe it's in an oversold kind of a situation, especially when the COVID crash happened, people panic sell, and that's when you buy more when it's low. That's number three. So number four, portfolio diversification. This is really important. This is the most important thing here actually. yes, you can say the plan is to invest $10,000 in Bitcoin, but if you put $10,000 in Bitcoin, but there will be other coins which are a lot cheaper, you could be able to make more money out of those coins. So in that kind of scenario, out of $10,000, you're going to invest like say 40 to 50% in Bitcoin and maybe 20-30% in Ethereum, and then you can add some Ripple, Dogecoin, XRP, Silica, likewise. So you have to make sure majority, like 40 to 50% or 60% of your portfolio you invested in Bitcoin and Ethereum, because they rank number one. Bitcoin is ranked number one, Ethereum is ranked number two. So majority of your portfolio is in Bitcoin and Ethereum, so you don't need to worry too much about those two coins, because there's less risk, like that these coins will go down in value compared to all coins, because when Bitcoin goes down by 10-20%, all coins could go down by 30, 40, 50%. But it's the same way the other way around. When Bitcoin goes up 10%, you get more money from all coins. So in that kind of scenario, if you feel like instead of putting all your money in Bitcoin, because as we know, as per the history, you will make more money out of all coins. That's when you put like 50 to 60% in Bitcoin and Ethereum, and the other 40% you can diversify among other asset classes. For example, Ripple, like mid cap, low cap, likewise. So that's number four. And point number 5, minimize trading. See, this is really important. Like I've done this myself. A lot of my friends done it as well. And then back in the day, I remember when during the bull market, a lot of people call and ask for which coin I should buy, and then what they normally do, they switch from coin to coin, do a lot of trading. Trading is really hard, right? I mean, you could have say 10 to 20, 30 years of experience in trading, but there's still chance that you could lose a lot of money. So the best thing is, if you have a long-term perspective, if you're investing into this kind of asset class for 1 to 2 years, like 12 to more than 12 months or so, you can minimize trading within that time period, because when you trade, there's a lot of risk involved. Like you have to read charts, you have to have a lot of knowledge, and people, the markets could get manipulated, and you don't know what will happen tomorrow, and then that's when you panic sell and panic buy, and you might not buy at the right time because you don't have a clear mind, because you are panicking, right? And then you sell when you're not supposed to sell. So if that happens, you could lose money by trading. So you can minimize trading, but if you really want to trade, maybe you can allocate 10% of your overall portfolio. So 90% you buy Bitcoin, Ethereum, and other mid to low cap all coins diversified in a portfolio, and 10% or 5 to 10% of that money, so maybe $500 to $1,000. If you really want, you can trade, but I might not do it. I really don't want to do trading because it's really hard. So that's number 5. And number 6, sell when high and take profit. So regardless what you do, let's say let's say you followed from point number 1 to point number 5, right? If you're not gonna sell, right, you simply haven't done anything. I mentioned this in my last video as well. I have a lot of friends. They invested really a bigger amount back in last year, and it has gone up by 5, 6, 7, 8 times. But they've been too greedy. They had no strategy to sell. So what happened? They did not sell, and the market goes down, and then they just probably maybe they are still holding it, but then they lost the opportunity to take profit, right? And then you probably have to wait for another year or two. To get more money out of the old coins or bitcoins they're holding. So profit taking is the most important thing. So let's not forget, we do invest. It could be any kind of a market. It could be gold, silver, shares, cryptocurrency, any kind of a market, or even investment property. We do invest to sell one day, right? It's not that we invest to hold it for 30, 40, 50, 60 years, right? Who knows, we might die in a couple of years, or we don't know that. So whenever you see profits, what you see is what you get. So whenever you see profit, you could take some. It's not that even when you sell, you need to have a strategy as well. When you sell, it's not that you sell everything. Whenever you see market goes up by say 30-40%, like, some coins will probably go up by 50-60%, or maybe like 5 times, like 10 times some coins. When you see that happening, you better start taking like 5 to 10% profit every time when the market is green. That's the best way to take profit. So unless it'll be like a worry, like when you had the chance and you keep on looking at your portfolio and you wish like you sold like 2-3 months ago, but you can't do much now because the market has gone down again. It's like it's that period that you have to wait for like 3-4, maybe like a year or so to take profit again, so that you just wasted 1 year, 1 to 2 years of your time just because you did not take profit. So this is really important. So yeah, I hope this is really important. Like a lot of my friends ask a lot of questions about how to buy and how to sell. So probably in my next video we're going to discuss about how to buy, like dollar cost, how to dollar cost average buy, and how to dollar cost average sell. So having said that, that's it for today. Thanks for your time. I'll talk to you in the next video. See ya.